Welcome to the Deep Dive. We've got some really fascinating material today, all about cryptocurrency,
Yeah.
its history, the trends we're seeing, even some trading strategies.
It's quite a world, isn't it?
It is. It really is.
Yeah.
We're going to unpack all of this together, and hopefully by the time we're done, you'll have a much better grasp on this whole new financial world.
It is a fascinating area for sure.
Yeah.
I think what we're really looking at here is a potential paradigm shift, and how we think about money and ownership,
Right.
all thanks to blockchain technology.
Okay, so let's start with the basics.
Okay.
Our material takes us all the way back to 2009
Wow.
and the mysterious birth of Bitcoin,
Right.
created by someone or maybe a group of people calling themselves Satoshi Nakamoto.
Mysterious indeed.
Still, nobody knows for sure who they are,
Yeah,
but what they created is causing a lot of disruption.
for sure. What makes Bitcoin so different is really the way it works, right? It's not like traditional currencies, that are controlled by governments or financial institutions.
Instead, it operates on this decentralized network
Yeah.
called a blockchain.
So instead of like a bank keeping track of all the transactions, this blockchain thing is like a shared public ledger
Yes.
that's spread out across thousands of computers.
Exactly, yeah. And because it's decentralized,
Uh-huh.
it's incredibly secure and transparent.
Right.
So anyone can see the transactions, but no single entity can manipulate them.
Okay.
So it's tamper-proof.
Got it. So no more relying on banks to handle things.
Right.
But Bitcoin wasn't the end of the story, was it?
No, it wasn't.
The article mentions all sorts of other cryptocurrencies too.
Yes.
These so-called altcoins.
Huh.
It's a jungle out there.
It is a jungle out there.
Yeah.
Yeah, Bitcoin really opened the floodgates.
Yeah.
Take Litecoin, for example.
Okay.
It came along in 2011, and it promised faster transactions than Bitcoin.
Okay.
That got people excited.
Right.
But then in 2015, Ethereum came along.
And this one introduced something truly groundbreaking.
Okay.
Smart contracts.
Now, smart contracts, I've heard that term, but honestly, it goes over my head a little bit.
Okay.
How would you explain that in simple terms?
Sure. Imagine you're buying a house.
Okay.
Typically, you'd need lawyers, banks, and all these intermediaries
Right.
to handle all the paperwork and ensure everyone's holding up their end of the bargain.
Right.
With smart contracts, you can actually automate that entire process.
Okay.
So the terms of the agreement are written into the code,
Mm-hmm.
and once certain conditions are met, like you making the payment,
Right.
the contract automatically executes things like transferring ownership of the house.
Wow.
No need for all that paperwork and back and forth.
So essentially, smart contracts are like self-executing agreements.
Yeah.
And because it's all on the blockchain,
Yes.
it's more efficient, it's secure.
Exactly. Everything's transparent, tamper-proof.
Okay, that's pretty revolutionary.
is.
The article mentions some other altcoins, too.
Oh.
Ripple, Cardano, Binance Coin.
It
It
seems...
seems like every day there's a new one popping up,
I know.
each with their own unique purpose and features.
That's true. The crypto world is so diverse.
Yeah.
It's important to remember that each of these altcoins is aiming to address different challenges or needs.
Okay.
Some focus on speed and efficiency.
Yeah.
Others focus on privacy and security.
Right.
It's constantly evolving.
Which is exciting and I imagine a little bit overwhelming at the same time.
Definitely.
But it sounds like this explosion of altcoins kind of created a frenzy back in 2017, 2018
Oh, yeah.
with these initial coin offerings, these ICOs.
Yes.
From what I understand, it was kind of a wild west out there.
You're not wrong. ICOs became a hugely popular way for crypto startups to raise funds.
Okay.
It felt like everyone was trying to get in on the action.
Right.
And there were definitely some questionable projects
Okay.
and outright scams
Wow.
mixed in with the legitimate ones.
So plenty of opportunity to make money, but also a lot of risks involved.
Yeah, absolutely.
What happened next? Did things calm down a bit?
Well, that's when regulators started to take notice,
Okay.
right? Governments around the world realized that this wasn't just a passing fad.
Uh-huh.
It was a major shift in the financial landscape,
Right.
and they needed to step in to protect investors
Of course.
and establish some rules of the road.
Yeah, with all the excitement and potential, some level of regulation is probably necessary to keep things from getting out of control.
Yeah, for sure.
But even with the regulatory scrutiny, innovation in the crypto world didn't stop.
No, it didn't.
The article mentions a big leap forward in 2020
Yes.
with the rise of decentralized finance, or DeFi.
Yes.
What's that all about?
So DeFi is essentially taking the principles of blockchain technology,
Okay.
decentralization, transparency, security,
Right.
and applying them to traditional financial services.
Okay.
So think lending, borrowing, trading, even insurance, but all without banks or other intermediaries.
Wow, so it's like building an entirely new financial system, but on the blockchain.
Precisely.
That's wild.
With DeFi, you can become your own bank.
Really?
You can lend your crypto assets to others, earn interest, or borrow against your holdings.
Okay.
It's all about giving individuals more control over their finances.
Fascinating. So we have Bitcoin shaking things up.
Yes.
We have altcoins expanding on its foundations.
Right.
And then DeFi coming along, just completely reimagining what finance could look like.
That's right.
And then right in the middle of all of this, we have the explosion of non-fungible tokens.
Oh, yeah. The NFTs.
These NFTs everyone was talking about.
I know, right?
It seemed like overnight people were buying digital art,
Yeah.
collectibles, virtual real estate.
It was huge.
What is the deal with NFTs?
Well, NFTs, they kind of brought the concept of digital ownership into sharp focus.
Okay.
Right? With NFTs, you can now verifiably own unique digital assets on the blockchain. It's like having a digital certificate of authenticity that proves you own the original.
Okay.
Which has huge implications for artists, creators, and collectors.
So you're not just buying a copy of a digital image.
No.
You're actually buying the original.
Exactly.
Which has inherent value because it's scarce.
Yes.
And verifiable.
That's right. It's a whole new way of thinking about ownership in the digital world.
It is. It really is. And it goes beyond just art and collectibles.
It does.
NFTs are being used for virtual event tickets.
Yeah.
In-game items, even real estate deeds.
The possibilities seem endless.
It's incredible how quickly things have evolved in just over a decade.
I know, it's amazing.
What started as this fringe experiment with Bitcoin has blossomed into this vast, complex ecosystem of cryptocurrencies, decentralized finance, digital ownership.
It is a lot to take in.
It's a lot to take in.
Yeah.
I'm curious about how this once obscure world of digital money started gaining traction.
Yeah.
With big institutions, companies, and even governments.
Yeah, me too.
How did that happen?
Well,
let's get into that next.
Okay. Yeah. It really is fascinating to see how cryptocurrency has moved from like the fringes of the internet into mainstream consciousness.
Yeah.
One of the most significant shifts, I think, happened around 2021.
Okay.
When major companies and institutions really started to get involved. You know, the materials you provided highlight Tesla, PayPal.
Yeah.
Even some big banks taking notice.
That's great. Yeah.
Suddenly, cryptocurrency wasn't just for tech enthusiasts. You know, it was being embraced by like the financial establishment.
That's remarkable.
Yeah.
What do you think sparked that shift toward mainstream acceptance?
Well, I think a few factors contributed to that.
Okay.
For one, Bitcoin's price was surging,
Okay.
which really caught the attention of investors who were looking for alternative assets. And this led to, you know, increased media coverage, more public awareness.
Yeah.
And at the same time, blockchain technology itself was maturing.
Okay.
And more people began to see its potential applications beyond just cryptocurrency.
So it's kind of a combination of the price action grabbing headlines.
Yeah.
And then the underlying technology gaining credibility.
Exactly. And as more institutional investors entered the market, you know, it created a sort of snowball effect.
Right.
Leading to even greater adoption and legitimacy.
Yeah, it seems like it.
We even saw governments around the world exploring the idea of creating their own digital currencies.
Wow.
These central bank digital currencies, or CBDCs.
It's like everyone just woke up to the potential almost overnight.
It does seem that way, right?
Yeah. But with all this rapid growth and adoption, there's got to be a need for some ground rules, right? Regulation's got to be a huge topic of conversation.
No, absolutely.
Yeah.
As cryptocurrency becomes more integrated into the global financial system, you know, governments and regulatory bodies, they're grappling with how to strike a balance between fostering innovation, but also protecting investors. So we're likely to see more comprehensive regulations around things like anti-money laundering measures, tax compliance,
Makes sense.
consumer protection.
It's like the Wild West needing some sheriffs
Exact.
to keep things in check.
Yeah.
What about the technology itself, though?
Yeah.
Is blockchain just going to stay the same, or are there innovations on the horizon?
Oh, blockchain technology is constantly evolving.
Okay.
One of the biggest challenges it faces is scalability.
Okay.
You know how to handle more transactions quickly and efficiently as adoption grows.
Right.
But thankfully, developers are working on solutions.
Okay.
For example, the Lightning Network is a layer 2 solution built on top of the Bitcoin blockchain.
A layer 2 solution. Can you explain what that means in a way that even I can understand?
Sure. Imagine a highway with a lot of traffic congestion.
Okay.
A layer 2 solution is like adding an express lane that runs alongside the main highway, allowing for faster and cheaper transactions.
Okay.
So in this case, the Lightning Network allows people to make smaller Bitcoin transactions off-chain and then settle them later on the main blockchain.
Right.
This helps reduce congestion and fees.
So it's a way of making Bitcoin transactions faster and cheaper.
Exactly.
Which is crucial for its usability in everyday life.
Precisely. Another major development is Ethereum's transition to Ethereum 2.0, which aims to make the network faster, more energy efficient, and more secure.
It sounds like a lot of work is going into making blockchain technology more robust and user-friendly.
Yeah, definitely.
But here's what I'm really curious about.
Okay.
What does all of this mean for the future of traditional finance?
Right.
Are banks going to become obsolete?
That's the question a lot of people are asking, right?
Yeah.
Rather than completely replacing traditional finance, I think we're actually witnessing a convergence of the two.
Okay.
You know, the materials you shared suggest that banks are increasingly offering crypto-related services.
Right.
And we're even seeing the approval of Bitcoin and Ethereum ETFs, or exchange-traded funds.
So even like my grandma, who has never owned a Bitcoin, could potentially gain exposure to it through her retirement portfolio.
Exactly. It's becoming much easier for everyday investors to get involved in the crypto market.
Wow.
And traditional financial institutions are recognizing that.
That's pretty wild.
That's a dynamic landscape.
It is. Now, the materials you provided also mentioned the metaverse and Web3.
Yes.
I have to admit, these concepts still feel a bit futuristic to me.
I understand.
How do they fit into the whole cryptocurrency picture?
Okay, so think of the metaverse as like a persistent shared virtual world. Where people can interact, own digital assets like virtual land or clothing. And even participate in economies using cryptocurrencies. Web3 is the vision of a decentralized internet built on blockchain technology.
So it's not just about digital money anymore.
No.
It's about digital worlds. Entire digital economies. It's like something out of science fiction.
It is a captivating concept, for sure. And it kind of ties back to what we were discussing earlier about decentralization. Web3 envisions a future where users have more control over their data and online experiences, with blockchain playing a key role in enabling that shift.
It sounds like cryptocurrency and blockchain technology are laying the groundwork for a whole new digital paradigm.
Yeah. I think so.
It's incredible to think how far we've come from the early days of Bitcoin.
I know.
But amidst all this change, what about Bitcoin itself?
Yeah.
And all those other altcoins? Do they still matter in this future you're describing?
Well, Bitcoin, despite its limitations, holds a unique position in the crypto world. It's often referred to as digital gold because of its limited supply and decentralized nature. Some see it as a store of value, a hedge against inflation.
So even with all the fancy new cryptocurrencies and applications popping up,
yeah,
Bitcoin still has a role to play.
I believe so. It's the original cryptocurrency.
Right.
The one that started it all.
Right.
And while it may not be the most innovative or feature-rich, it has a certain brand recognition and a dedicated community of supporters.
It does.
As for altcoins, the landscape is constantly evolving.
Right.
Some will undoubtedly thrive, particularly those that solve real-world problems and have strong use cases in areas like DeFi, NFTs, and enterprise solutions.
I'm thinking back to those altcoins you mentioned earlier.
Yeah.
Ethereum with its smart contracts.
Right.
Solana, known for its speed and efficiency. And Polkadot, connecting different blockchains together.
Yes.
It seems like the ones that succeed will be the ones that offer real value and utility.
You've hit the nail on the head. But for many, one of the most compelling aspects of the crypto world is the trading aspect.
Right.
There are various strategies for navigating this exciting but often volatile market.
This is where it gets really interesting for a lot of people, right? I've heard all sorts of stories about people making and losing fortunes trading crypto.
Yeah.
What are some of the key strategies that people are using?
Okay, well, let's start with the simplest approach.
Okay.
Spot trading.
Okay.
It's essentially buying and selling crypto at the current market price on an exchange.
Okay.
Ideal for beginners and those with a long-term investment horizon.
So if you believe Bitcoin or Ethereum or any other cryptocurrency is going to increase in value over time, you just buy it and hold on for the ride, hoping for the best.
That's the basic idea. It's a strategy that requires patience and the ability to stomach the market's ups and downs.
Of course.
But for those who prefer a more active approach, there's day trading.
Okay.
This involves making multiple trades within a day, trying to profit from those short-term price fluctuations.
Day trading sounds intense.
It is.
It seems like you'd need nerves of steel and a deep understanding of technical analysis to succeed with that strategy.
You're absolutely right. Day trading is not for the faint of heart. It requires quick decision-making, a high tolerance for risk, and a solid grasp of chart patterns and market indicators.
Wow, okay.
Then we have swing trading, which focuses on capturing medium-term price swings that play out over days or weeks.
So instead of trying to time the market perfectly on a minute-by-minute basis, swing traders are looking for those larger waves of momentum.
That's the idea. Swing traders use a combination of technical and fundamental analysis to identify potential entry and exit points, riding the waves of market sentiment. And for those seeking even more leverage and potential profit, there are futures and derivatives trading.
I'm going to need a little bit of help understanding this one. What are futures and derivatives?
So these are financial instruments that allow you to speculate on the price of an asset, in this case a cryptocurrency, without actually owning the underlying asset.
So you're not actually buying and selling Bitcoin, you're just betting on its price movements.
Exactly. Futures and derivatives trading can offer high leverage, which means you can amplify your potential gains, but also your potential losses.
Of course.
It's a high-risk, high-reward strategy that's best suited for experienced traders who understand the intricacies of these instruments.
It sounds a bit like gambling, to be honest.
It can be, yeah.
But not everyone is looking for those quick profits and adrenaline rushes.
Right.
Are there ways to earn more passive income in the crypto world?
Absolutely. Staking and yield farming are two popular methods for generating passive income with your crypto holdings. Staking involves locking up your crypto to support a blockchain network and earning rewards in return. Think of it like earning interest on a savings account, but instead of depositing fiat currency, you're depositing crypto.
So you're essentially being rewarded for helping to secure and maintain a blockchain network.
That's right. And then there's yield farming, which is primarily used in the DeFi space. It involves lending your crypto assets in liquidity pools to earn interest or other rewards.
So you're putting your crypto to work and earning a return on your investment without actively trading.
Exactly. The materials you shared also mentioned something called arbitrage trading.
Yes.
Do you remember that one?
I do. What is that?
So arbitrage trading involves exploiting price differences for the same asset across different exchanges. You buy low on one exchange and sell high on another. Pocketing the difference as profit.
Buy low, sell high.
Exactly.
It sounds simple enough.
It does, doesn't it?
But I imagine it requires a lot of speed and vigilance.
It does.
To find those price discrepancies and capitalize on them before they disappear.
You're right. It's not as easy as it sounds. Arbitrage traders often use bots and sophisticated software to track prices across multiple exchanges and execute trades quickly and efficiently.
Makes sense. Finally, for those who are new to trading or prefer a less hands-on approach, there's copy trading in bots. Copy trading sounds intriguing. Is it like following the trades of experienced investors? And automatically mirroring their actions?
You got platforms like eToro and Binance offer copy trading features that allow you to automatically replicate the trades of seasoned traders. And then there are automated bots that can execute trades based on preset strategies, removing the emotional element from trading.
Wow, that's a whole lot of trading strategies to wrap our heads around.
It is.
From the simplicity of spot trading to the complexities of futures and derivatives. It seems like there's an approach out there for every type of investor.
For sure.
From the cautious long-term holder to the adrenaline-seeking day trader.
Exactly. But before we get too caught up in the excitement of potential profits, you know, it's crucial to talk about risk management.
You're absolutely right. It's easy to get swept up in the hype.
It is.
Especially with all the success stories we hear. But let's get real. This market is notorious for its volatility.
Definitely.
What are some key things people need to keep in mind before they dive headfirst into the crypto trading pool?
It's easy to get caught up in the excitement.
It is.
But it's so important to remember that cryptocurrency is still a relatively new and volatile asset class. What are some of the key things our listeners should keep in mind when it comes to managing risk?
That's a great question.
Yeah. First and foremost, never invest more than you can afford to lose. Yeah. That's like rule number one in any type of investing.
Right.
But it's especially crucial in the crypto world where prices can swing wildly in both directions.
Right. Don't bet the farm.
Exactly.
Speaking of which, the materials you provided emphasize the importance of setting stop-loss orders.
Yes.
Can you explain what those are and why they're so important?
Well, sure. A stop-loss order is essentially an instruction to automatically sell your crypto holdings.
Okay.
If the price drops to a certain level that you set in advance, it's a way of limiting your potential losses.
So you're basically saying, if the price drops below this point, I'm out no matter what.
Exactly. Think of it as a safety net that prevents you from losing more than you're comfortable with.
That seems like a smart way to protect yourself from those sudden market crashes we hear about.
It is a good tool, but even with stop-loss orders and a cautious approach, staying informed is key.
Of course, this market changes so quickly. How do you stay informed?
I know, right? It's so much. The crypto landscape is constantly changing.
Right.
New projects are emerging, regulations are evolving. The technology itself is continuously being developed.
Yeah, it's like drinking from a fire hose.
It is.
There's so much information out there. Any tips on how to stay sane amidst the constant flow of crypto news and updates?
Well, one way to make sense of it all is to focus on a few reputable sources of information.
Okay.
Subscribe to newsletters, follow industry experts on social media,
right.
Join online communities where you can discuss and learn from others.
Right.
But, don't believe everything you read.
Of course.
Especially on social media where there's a lot of hype and misinformation.
Good advice.
Yeah.
Do your research.
Yes.
Be discerning. And don't get swept up in the FOMO.
Right.
The fear of missing out.
Exactly. But even with all the right information and a cautious approach, there's always the risk of making bad decisions.
Right.
That's where diversification comes in.
Oh.
One of the fundamental principles of investing is to avoid putting all your eggs in one basket.
Right.
This is especially important in the crypto world.
Okay.
The materials you shared suggest spreading your investments across different crypto assets to reduce your overall risk.
So instead of going all in on Bitcoin, for example, it's smarter to spread your bets across a range of cryptocurrency.
Exactly. Diversification helps to mitigate risk because if one asset performs poorly, the others can potentially offset those losses.
Makes sense.
It's all about finding a balance that aligns with your risk tolerance and investment goals.
Diversification makes a lot of sense.
Yeah.
But let's say I've done my research.
Okay.
I've set my risk tolerance. And I'm ready to buy some crypto.
Right.
How do I even choose where to do that? There's so many exchanges out there.
There are a lot of exchanges.
Yeah.
Choosing the right exchange is crucial.
Okay.
Look for a platform with a solid reputation.
Okay.
Strong security measures, and sufficient liquidity.
Liquidity meaning there are enough buyers and sellers that you can easily trade your crypto.
Exactly.
Without running into issues.
That's right.
So security, reputation, and liquidity, those are the key things to look for in an exchange.
Yes. Any final words of wisdom for our listener?
Oh, yeah. Any final words of wisdom?
Before we wrap up this deep dive into the crypto world.
It has been a deep dive.
It has.
Yeah.
One final piece of advice, and perhaps the most important, remember to keep your emotions in check.
Yes.
Crypto markets are highly volatile.
They are.
And it's so easy to get caught up in the excitement or the panic.
Yeah.
Don't let fear or greed drive your decisions.
Right.
Stick to your strategy. Do your research.
Right.
And remember that investing is a long game.
That's wise advice. It's so easy to get swept up in the emotional roller coaster of the market.
I know.
Especially when you see those big green candles or those red drops.
Right.
But staying level-headed is key.
Absolutely. The more you understand about cryptocurrency, the better equipped you'll be to navigate the market with confidence and make informed decisions that align with your financial goals.
Well, this has been an incredible journey.
It has.
We've covered so much ground, from the birth of Bitcoin.
I know, it's amazing.
To the rise of altcoins, DeFi NFTs, and even the metaverse.
It's mind-blowing.
It is. Yeah. It's clear that we're witnessing a financial revolution unfold before our very eyes.
And the most exciting part is we're still just at the beginning.
Right.
The future of cryptocurrency is full of potential and possibilities, both in terms of technological innovation and how it shapes the way we interact with money and value.
So, dear listener, as you embark on your own crypto adventure, remember what we've explored today. Do your research.
Yes.
Manage your risk. Stay informed.
Right.
Diversify your portfolio. Choose your exchange wisely. And above all, keep those emotions in check.
For sure.
Remember, this is a marathon, not a sprint.
With blockchain technology advancing rapidly and mainstream adoption increasing, how do you envision cryptocurrency shaping the future of finance?
That's a great question.
What role will you play in this evolving landscape?
That's something for you to ponder as you continue your exploration of this fascinating world.
Absolutely.
We hope this deep dive has given you a solid foundation to build upon.
I accept.
Until next time, happy crypto adventures.
Happy investing.